Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here again. Today is Thursday. 1 week has already been passed. Before we start our Daily Dose of Market Insights, very good morning. Today will be Thursday, the 25th of April, 2024. So before we jump straight into the crux of today's Daily Dose, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell or any financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook, I would like to share with you all what has taken shape yesterday and as well as in early today's Asia session in terms of the key data releases, both on the events, economic data, and as well as how does it impact the respective broad-based cross asset classes. So first and foremost, the most important thing is, like I share with you, this week is pretty much crucial for the major US stock indices. Why? Because it's the earnings release week of four magnificent seven stocks. Okay, so Tesla has already reported. Then we have Meta, Google, which is Alphabet, and followed by Microsoft. So Meta, which is Facebook, reported their earnings right before the start of the Asia session today. That means way early at about 5 a.m. Singapore time. So what we could see over here is the rather very interesting movement of Meta. So Meta actually plunges 16%. Okay, so is actually a very one of its worst daily decline that is seen so far in the last of we call it 5 years or so. So 16%, but that's after hours. So okay, the thing about I want to share with you is for US stocks, there's actually normal trading hours and after hours. So after hours is when the close of the US session, there's still trading going on. And whatever key component stocks that is trading after hours, any significant movement will have an impact on their respective major US stock indices. Let's say Meta has a strong weightage. I think it's the top 5 stocks inside the S&P 500 and the top 5 stocks inside the Nasdaq 100. So for sure, any significant percent move will have a significant movement on the S&P and the Nasdaq 100 during the off hours session. Because why? Because the Nasdaq 100 and the S&P 500 are still trading. These index are still trading outside the normal US hours via other derivatives product like the E-mini and futures, okay, the S&P E-mini futures and the Nasdaq 100 E-mini futures. All right, and for OANDA's pricing of the Nasdaq 100 contract and the S&P 500 contract is based on the price movement of the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures that is trading right now during the Asia session. Okay, so the one's interesting over here is that, like I mentioned earlier on yesterday, is that ahead of the release of Meta earnings, price action as depicted by the movement of the stock indices in the last 2 days, Monday to Tuesday, has been heavily being positively priced in a rosy expectation out from Meta earnings day. Okay, so what happened is that any little disappointment could actually see a opposite impact on the stock price. Then in relation, it has a negative feedback loop back into the index as well. Why? Because if you look at now the Nasdaq 100 on the futures market is actually trading down by close to 1%, okay, negative 1%. So that actually explain if you look at the pricing of OANDA's Nasdaq 100 contract is also coming down as well, breaking below a support level that I highlighted yesterday. So later I'll jump straight into the chart. So one of the catalysts that actually easily created this intraday negative feedback loop is due to what I call just a slight revenue forecast downbeat. All right. So yes, better than expected result, but however, their revenue guidance for the next quarter came down much lower than market is expecting. So it's just only a very slight tick down. So what you could see over here is that Metal says expect the sales for the second quarter to be at 36.5 billion to 39 billion. So that's actually below analyst average estimate of 38.3 billion. So just only a fair little tick down could actually cascade a very significant negative impact on the after hour stock price of Meta, which is plunging 60% right after this we call it earnings, we call it guidance that's being released after the close of the US session. All right. So like I mentioned, any little a slight negative we call it guidance up from this seven, either any of these seven magnificent sevens, any of these magnificent seven stocks could actually see a highly skewed towards impact on their respective stock price because of the kind of optimism that is being held or being priced into their stock prices earlier before the release of such news. Okay, so that's something interesting to watch out for. So going forward, this is the key data I'd like to share. And also do not forget over here is that macro factors right now is also not supporting risk on behavior generally. Why? Because of the US 10-year Treasury yield that is continue to inch much higher. So if you look at the US 10-year Treasury yield, like sharing my screen over here, it's going to hold pretty much firm above the 4.5% last week breakout level. All right. So it's pretty firm. So for those who knows about technical analysis, this price movement over here in my screen is more like a bullish pennant consolidation before another potential up move potentially could actually take shape on the 10-year US Treasury yield based on a technical analysis perspective. That means, i.e., the medium-term uptrend still remains intact. All right, so given that the medium-term uptrend remains intact for the 10-year Treasury yields, that means going forward, we do expect further potential up move in the 10-year US Treasury yield, which could, i.e., sees higher cost of funding environment. Potentially, that also could act as a headwind for major US stock indices. Why? Because in general, higher cost of funding will actually trim down net profit margin because it's a cost, and that could also start to see a bit of corrective move that will actually unfold in the major US stock indices once the earnings season gets underway and macro factors starts to actually come back into the picture. All right, so now that's for the intermarket relationship. And what we could see over here is overnight there's actually a strong push up in the US dollar, but the strong push up in the US dollar comes from only one particular movement. This is the 5-day rolling performance, is from the dollar yen. Okay, so this is as of 25th. All right, let me change this date. Okay, so what we could see over here is that the dollar yen clearly is the strong outlier, whereas the rest of other currency start to kind of trade sideways against the dollar. So one of the reasons for the dollar yen over here is due to also momentum factors after the dollar yen managed to decisively break above 155 figure level and surpass the first resistance that we highlighted in our daily dose is 155.10. And after surpassing this level, there is no signs of actual BOJ intervention under the instruction of the Ministry of Finance. It's just only kind of a verbal warning, and the market allow it to actually rise higher going forward into the US session yesterday. And also, if you look at it right now, fundamentally, the yield spread between the US 10-year Treasury and the JGB is also supporting stronger dollar strength against the yen. So if BOJ were to intervene at this point in time, given there is a very strong up-pace move in the US 10-year Treasury yield, the impact of their intervention will be less fertile. Okay, or it will be less fruitful. So how do I look at that? Is by looking at the spread of the 10-year JGB yield versus the spread of 10-year US Treasury yield over here. So let me share with you this particular chart. So what we could see over here is, yes, both the if you look at absolute term, yes, the 10-year JGB yield and the 2-year JGB yield, they are rising, okay? But the US Treasury yield is rising at a faster pace compared to the JGB yield. So looking at the longer term 10-year US Treasury yield minus the 10-year JGB yield, so this is the spread. So if you look at over here, there was a bullish breakout, okay, that took shape on earlier this month, 8th of April. And if you look at their trajectory, it's still inching upwards much higher. So this is the daily chart of the spread between the 10-year JGB yield and the no the 10, okay, put it like that, it's the 10-year, okay, mathematically, it's the 10-year US Treasury yield minus the 10-year JGB yield, okay. So if you look at it, the spread is actually pointing upwards, okay, and it's trading in a parallel channel, okay, upwards. All right, so if you look at the shorter term one as well, the 2-year US Treasury yield minus the 2-year JGB yield, okay, there's a major ceiling at 5.11%. All right, so if you look at the momentum, it's also trading in a upward channel, okay. So overall, what we could see over here is that the yield spread premium between the treasury US Treasury yield and the JGB yield is actually widening. All right, that is actually supporting dollar strength against the yen from a fundamental perspective. And if we talk about trend analysis, if I were to overlay it with the parallel channel, it also could support this ongoing widening of the US Treasury yield premium against the JGB yield from the 10-year tenure and the 2-year tenure. Okay, right. Now that's about it for the intermarket correlationship. Now, what's next in terms of the oil market? So oil market continue to be resilient, holding above our support level at the 50-day moving average for West Texas crude oil. So one of the reasons that is supporting it as well is because of the US stockpile. So if you look at yesterday's data over here, there's this inventory stockpile. So US crude oil stockpile. So this is a weekly figure. So that is for the last week figure for the week ending 19th of April. So if the stockpile increase, it represents an increase in supply, in oil supply in US. So that could actually dampen oil prices. All right. So if the stockpile decreases, that actually reduce the supply in US, oil supply in US, which could actually support strength in WTI crude oil prices. Okay, so what you see over here is that the stockpile actually decreased unexpectedly to negative 6.36 million barrel. What is market is expecting is a positive figure of 1.6 million barrel. All right, so that actually also explain the fundamental reason why oil prices remain resilient yesterday due to a much more drastic reduction in US weekly stockpile compiled by EIA. That's the agency that's in charge of this stockpile US stockpile oil stockpile compilation on a weekly basis. All right. That other than that, early this morning there is no other data that's coming out other than the metal earnings announcement. So with that, right, let us now jump straight to the short-term technical outlook. All right, so let's start with the FX market first. All right, so the FX market over here start with the Aussie dollar. All right, let me expand my screen so that you guys could see. Okay, Aussie dollar. So Aussie dollar yesterday we flipped back to a bearish bias. Why? Because it's coming very close to the 65.45 pivotal resistance level, and this pivotal resistance level, if you take into account the Fibo ratio, Fibonacci retracement from this significant last drop on the hourly chart, is also close to the golden ratio at 61.8% and also right below the key 50-day and 200-day moving average that is actually acting as a resistance as well. So no price actually indeed inched down much lower within our expectation, and right now in today's Asia session it started to trade sideways but can't break above yesterday's start US session high over here at this little line here. This yesterday US session high, it can't break above this level here. Okay, so that was US session high before it tumbled throughout the middle part of the US session. Okay, so there was a nice rejection off here. And if you look at this point in time, the RSI also starts to break down as well. Okay, taking into account of this momentum break over here. So all in all, no change. Still maintain that short-term bearish bias on the Aussie dollar with 65.45 short-term pivotal resistance. Next support level to watch in the near term, 64.60. A break below this level exposes 64.25 next on the Aussie dollar. Hourly close back above 65.45 will invalidate this short-term bearish bias to potentially see a squeeze up for the next near-term resistance zone to come in at 65.90/6610, which is the upper limit over here of this minor descending trend line resistance that I drew from the high of 8th of March. Okay, dollar yen, like I explained earlier, no signs of BOJ intervention coming in yet. Price action remains strong, coming close to the second resistance that we highlighted yesterday, 155.70. So above 155.70 sees 156.30, followed by 156.70 next, ahead of tomorrow's BOJ monetary policy meeting, which we'll cover earlier tomorrow's morning daily dose. Okay, so the key thing over here is that this is the upper limit of this minor ascending channel, 156.70, be so very clear to the 157 psychological level as well. So if you look at it over here, is that for sure this will be the key short-term pivotal support level to maintain the short-term bullish bias on the dollar yen. Why is it important? Because this is the former kind of a minor range top tested and saw this rebound that took shape yesterday during the US session, and so now confluence with the lower limit of this minor ascending channel. So I don't want to target so tight uh, at this level here. So this could be a kind of a first support level to watch out for around this level here. Okay, where you start to see that long little shadow doji. It's kind of a spinning top hammer over here before price action decisively starts to shape the up mover. So this could be the first support level at around 155 figure level, which is the psychological level, but I don't tie it at 155, I put it at 154.70. So 154.70 will be the short-term pivotal support level to maintain this short-term bullish bias outlook on the dollar yen. An hourly close below 154.70 will invalidate this short-term bullish bias to see a much more pronounced minor corrective decline scenario unfolding. Next support level to watch will be at 153.90 for sure. Last Friday, inverted V shape swing low. Below it exposes 153.30, we saw confluence with the upward sloping 20-day moving average. Okay, European currency pretty much boring, going to trade within the sideways range over here. So the euro dollar still no change, still below that sideways. Okay, below the 107.25 short-term pivotal resistance. We saw confluence with the downward sloping 20-day moving average. So still maintain that bearish bias in the short term, but however, it got to break below the first support level at 1.0640 before exposing the last week low at 1.06 in the near term. An hourly close above 1.0725 invalidate this short-term bearish bias to continue to see this counter trend rebound scenario, going to see an extension of it to expose the next intermediate or near-term resistance at 107.80, followed by 108.20. Okay, 1.0820 will be the confluence of the 20 and the 50-day moving average, acting as a similar level at this 1.0820 resistance. Sterling dollar. Okay, so for the sterling dollar over here, okay, no change, still using 1.2520 as my short-term pivotal resistance, which is confluencing with the 20-day moving average as well. And what's interesting over here is that the RSI has starts to shape a kind of a bearish divergence, lower low, lower high, pardon me, lower high over here, whilst price action continue to trade sideways, okay, in the Asia throughout the European and US session yesterday. But first support level it got to break below is that the 1.2390 before much more downside momentum starts to play into the potentially play into the sterling dollar to expose last week low at the 1.23 figure level. Okay. However, an hourly close above this 1.2520 will invalidate this short-term bearish bias to see the extension of this ongoing counter-trend rebound scenario. Next resistance will be at 1.2570, which is the 200-day moving average, followed by 1.2640, which is the 50-day moving average, and as well as the minor descending trend line that I drew from 8th of March. Okay, so that's for the FX market. Then now let us switch to the Asia Pac stock indices first. Okay, surprisingly, the Hong Kong 33 sees a squeeze up over here. Okay, so we know that we start to see a very strong squeeze up, right? So given this strong squeeze up over here, let us not get so fascinated by this intraday push up. Let's take a longer term picture by looking at the daily chart. All right, so if you look at the daily chart, what's interesting over here, there's actually a retest of this long-term bearish trend descending channel that is in place since February 2021. Okay, if I go all the way back over here, it's this level here. So this was actually the earlier rally right after that COVID-19 scare. Then thereafter, it's been trading in a very broad-based long-term circular bearish trend since then. All right, so and also it corresponds to the 17,600 medium term pivotal resistance that I highlighted, and right now the RSI is right at a key resistance level, okay, at around the 65 level mark, very close to the overbought zone as well. And what's interesting over here is that yes, it's now testing the 17,600 level, and now let us strip immediately down to the hourly RSI. So the hourly RSI now starts to shape that bearish divergence as well right after today's morning intraday push up. So given these technical elements that are still on resistance on the higher time frame, and we start to see signs of a bullish exhaustion on the hourly chart as depicted by the bearish divergence condition that's being flashed out on the hourly RSI right now. So with that, I do not want to be so bullish to say that 17,600 will definitely see a bullish breakout. Perhaps this morning intraday push out is more like a one-time off outlier situation where price action could start to see a fake move or a bullish fakey move instead. So with that, I'll be using 17,600 as my pivotal resistance for today. Still maintain that bearish bias on the Hong Kong 33 for today. However, first support level to watch, it got to break below 17,100. So there is the first support level to watch for today, which is yesterday's US session low. Okay, before it kickstart this strong intraday outlier push up on the Hong Kong 33. A break below 17,100 exposes the next near-term support at 16,785, 16,600, which is the 20-day moving average, I think as a support as well. All right, so but however, an hourly close above 17,600 will invalidate this short-term bearish bias to see the continuation of this squeeze up to expose the next near-term resistance at 17,930 level. Okay, which is this congestion area over here, 22nd and 20th of November last year. Okay, Nikkei 225. So Nikkei 225 yesterday we were neutral. Okay, so right now it's attempting to break the lower neutrality limit at 37,820. But however, the RSI has started to shape that bearish breakdown. Okay, so with that, we will flip to a bearish bias on the Japan 225 or the Nikkei 225. The clear resistance to watch out for will be at this 38,640, 38,800 short-term pivotal resistance level. A clear break below 37,820 exposes the next support level at this 37,070 level, followed by 36,650 level over here. So what's 36,650? So 36,650 is actually correspond to this major ascending trend line support, that I drew from the low of 4th of October last year. 4th, yeah, this one 4th of October low last year, and as well as the former medium-term swing high of 23rd of January this year now turns into a pullback support at 36,650 level. All right. Okay, an hourly close above the 38,800 level will invalidate the short-term bearish bias to see the continuation of this counter trend rebound scenario towards the next resistance level at 39,390, which confluence close to the 50-day moving average, and as well as this descending trend line support. No, descending trend line resistance, not support, descending trend line resistance that I drew from the high of 22nd of March. German 30. So German 30 continue to shape that reaction of this first resistance level at 18,310 level over here. So with that, right, I'll be using this 18,310 as my short-term pivotal resistance for today, given there's a nice bearish reaction of it. Okay, so this will be the next. Okay, so it's I tighten it. Okay, and price action now is trading back below the 20-day moving average, with the hourly RSI back below the 50 level mark as well. So still maintain that short-term bearish bias on the German 30 after yesterday's bearish reaction. 18 tighten it, short-term pivotal resistance to 18,310. First support level to watch still remains unchanged at 18,000 level. A break below it exposes 17,840. Only an hourly close above the 18,310 will invalidate this short-term bearish biasness to see the continuation of this bullish move. Next resistance level to watch will be 18,400, followed by 18,490. Dow Jones Industrial Average, okay, still can't break above the 38,590 short-term pivotal resistance that we highlighted earlier. We also confluence with the 20-day moving average acting as a resistance as well. And what we could see over here is that the RSI has started to shape a series of lower high and back below the 50 level mark. So no change. Support level to watch for the first support level to watch will be at 38,020, followed by 37,700. Okay, so these are the two support level to watch. Still maintain that short-term bearish bias on the US Wall Street 30. Only an hourly close above 38,590 will invalidate this short-term bearish bias to see the continuation of this potential rebound. Next resistance will be at 38,930. Nasdaq 100. So Nasdaq 100 came down as expected, much more than the Dow Jones Industrial Average. Why? Because of its heavily component stock. One of the key component stock inside, which metal, actually fall by 16% during the after hours trading. So that led actually the strong push down during today's Asia session and hit the first support level at 17,390. Okay, so this support level has been met. Okay, so no change for sure. 17,690 short-term pivotal resistance level. So that was where the bearish reaction takes shape, the inflection level, before it actually came down. So this will be still the pivotal resistance to maintain our short-term bearish bias on the Nasdaq 100. Next support level to watch 17,290. A break below it exposes this minor swing low area of last Friday and this Monday at 17,030. All right. However, an hourly close back above 17,690 will invalidate this short-term bearish bias to see the continuation of this counter trend rebound to the next resistance to come in at 17,810, followed by 17,965. All right. So net overall, all the major key indices that I covered are still remains below their pivotal resistance level. Now back to WTI crude oil commodity. So commodity price yesterday's remained firm with our first support level 83.20 before shipping that minor bounce. Okay, so still no change using 80.80 short-term as a short-term pivotal support level close to the rising 50-day moving average. Still maintain that short-term bullish bias on West Texas oil. First resistance level it got to surpass will be at 84.40 before gaining much more traction for the next intermediate resistance to come in at 86.35, 86.35, which is the minor swing high of 16th of April and 19th of April. Okay, so that's the short-term resistance level to watch out for. Within this short-term bullish bias dynamic that is still intact. Only an hourly close below 80.80 will negate this bearish bias to see the continuation of this minor corrective decline scenario to unfold, to expose the next support level at 78.80, 78.40. Okay, spot gold. Okay, XAU/USD still continue to hold above the 2,300 short-term pivotal support level. So still no change, still using that 2,300 short-term pivotal support level to maintain this potential bullish bias short-term recovery scenario. First resistance to watch will be at 2,365. A break up above it exposes the swing high area of last Friday and last two Friday, which is acting as a resistance at 2,420. However, an hourly close below 2,300 put the short-term recovery scenario on the back of the table, means invalidate to see the extension of the count of this corrective decline scenario to unfold towards the next support level at 2,265, followed by 2,235, 2,200, which actually correspond to the upward sloping 50-day moving average next. All right. Now, with that pretty much sum up the short-term technical outlook on the various broad-based cross-asset classes. So key economic data to look out for today before we go. So today will be Thursday. So during the European session, some consumer confidence data in key Eurozone area, which will be at 2 p.m. Germany. GfK consumer confidence for the month of May will be out at 2 p.m. Singapore time. And thereafter, we do have the flash Q1 US GDP data that is out at 8:30 p.m. Singapore US time before the start of the US stock trading session. And thereafter, that's pretty much quiet. Then for that, after the close of the US session, we do have two key earnings from the Magnificent Seven cohort, that is Microsoft and Alphabet. So let me share with you the earnings calendar. Okay. Okay, Wednesday. So that is actually Thursday. Yep, over here. Microsoft and Alphabet, so they will actually release their result after the close of the US session today. That means early 5 a.m. Singapore time tomorrow. All right. So both of them are actually expecting very strong, rosy earnings, EPS, earnings per share 2.82, up from previous year ago, year-on-year basis 2.45%, 2.45, and Alphabet as well, pretty much rosy EPS, earnings per share for this quarter 1.5 above last year's quarterly Q1 of the last year at 1.17. So we got to be very mindful given the fact that the Nasdaq 100 right now managed to react off the short-term pivotal resistance that we highlighted yesterday. All right, so with that pretty much sum up for today's daily dose of market insights. So do have a great day ahead. Take care, and we shall speak again tomorrow. Thank you.